After studying this module, you shall be able to know about the fundamental analysis. Examine fundamental analysis is used by investors or stock analysts. Understanding the fundamental analysis is to be done. Evaluate the meaning of economic, industry and fundamental analysis. Appreciate the benefit of this analysis to investors. Every time we purchase a good in the market, we want to have more benefit from that product than the price we have to pay for that product. The type of benefit varies with the type of product, but it is sure that whenever we buy anything, we want that return from that particular thing should be more than the amount we have to pay for that. Similarly, when we buy a share, we want to know how much benefit we will derive from that as against the current value of that share. Fundamental analysis is a one such technique. Now let us understand fundamental analysis. A method of evaluating a security that entails attempting to measure its intrinsic value by examining related economic, financial and other qualitative and quantitative factors. Fundamental analysts attempt to study everything that can affect the security's value, including macroeconomic factors like the overall economy and industry conditions, and company specific factors like financial condition and management. The end goal of performing fundamental analysis is to produce a value that an investor can compare with the security's current price with the aim of figuring out what sort of position to take with that security. Underpriced is equal to buy, overpriced is equal to sell or short. This method of security analysis is considered to be the opposite of technical analysis. Now the question arises, what is fundamental analysis? Fundamental analysis is a method that attempts to predict the intrinsic value or true value of an investment. Intrinsic value refers to the true value of the share. This true value can be found by an investor by discounting the future dividends and expected market price of share by his required rate of return. In case this true value or intrinsic value is more than the current market price, then the investor will desirous to buy that share, otherwise not. Fundamental analysis is based on the theory that the market price of an asset tends to move towards its real value or intrinsic value. In fundamental analysis, an investor makes an attempt to study everything that can affect the share price. One tries to find out all the quantitative and the qualitative factors that he finds to be important for his study. He can look for information about the economy, industry and the company so that he can find a right security to invest in. The ultimate aim of doing fundamental analysis is to find a value that an investor can compare with the security's current price, and on basis of his comparison he finally decides whether to buy an underpriced security or to sell an overpriced security. All this decision is based on the assumption that ultimately a security's price will reach to its intrinsic value or true value. Next we will discuss that why we should study fundamental analysis. Before understanding about how to do fundamental analysis, one should understand why he should do fundamental analysis. The answer to this question lies in the fact that all of us are rational consumers. We want more satisfaction for every rupee spent. Everyone wants to maximize his benefit. For example, many times when we are at a shop to buy a product, We often say to the shopkeeper to tell us the final price of the product at which he is ready to sell, as the price told by him earlier are not according to the worth of the product for us. The same concept applies here. When we buy a share, we are offered with various shares from various companies. Here again, the question arises that whether the market price of share is a true reflector of its actual worth or not. Thus, fundamental analysis helps here. By doing fundamental analysis, one can calculate the intrinsic value of the share and then compare it with its market price. If intrinsic value is greater, then he buys the shares, and if it is lesser, then he sells the share, if he is holding some previously purchased shares.
Why use fundamental analysis? Fundamental analysis is built on the idea that the stock market may price a company wrong from time to time. Profits can be made by finding underpriced stocks and waiting for the market to adjust the valuation of the company. By analyzing the financial reports from companies, you will get an understanding of the value of different companies and understand the pricing in the stock market. After analyzing these factors, you have a better understanding of whether the price of the stock is undervalued or overvalued at the current market price. Fundamental analysis can also be performed on a sector basis and in the economy as a whole.
Next question is how to do fundamental analysis. You must be thinking that there must be some techniques wherein we can find out whether we should buy the share or not. So now we will discuss the techniques wherein we can discuss fundamental analysis. It is a fact that it is not easily possible for an investor to find the intrinsic value of each and every stock present in the stock market and then decide on what to buy. Even if someone does so, it will take him years, and finally when he will reach to a conclusion that the result will be outdated, as many new developments must have been taken place during the time he was analyzing. So this makes it essential for an investor to find a certain technique to short down a list of shares to be studied. As everyone knows that the price of a share is affected by the performance of a company, and the company's performance is dependent upon the changes taking place in industry and economy. Thus, it is important for us to make an analysis about economy, industry and company. The logic for this three-tier analysis, that is the analysis of economy, industry and company, is that the company performance depends not only on its own efforts but also on the general industry and economy factors. A company can be from any industry. For example, we can take a Reliance, Infocom, Idea, etc. These are companies that come under telecom industry. Thus, these companies will be affected by any policy changes or any matter related to this industry. And this industry operates in an economy. Thus, this industry will be affected by the changes in the economy. Thus, the factors that affect a company can be broadly classified as economic factors like rate of growth of the economy, exchange rates, etc. Next is industry factors like demand and supply in the industry, competitors in the industry, etc. Next is company related factors like image of the company and its managers, profitability, etc. So, fundamental analysis involves the following three analyses. First, economic analysis. Second, industry analysis, and lastly, third, company analysis. It can be done in two ways, top-down approach and bottom-up approach. If we start from economic analysis and then industry analysis and company analysis is performed, it is called as top-down approach. On the opposite side, one can go by studying about the company first, then its industry analysis and then economic analysis. Then it is called as bottom-up approach. As you can see in the figure, top-down approach and bottom-up approach has been shown. Now we will discuss what is economic analysis. Economic analysis relates to the analysis of the economy. If the economy is booming and growing, then this will also have a positive attitude for the industries and hence the companies. For instance, in current scenario of Indian economy, when India is increasing its goodwill and building a positive identity internationally, it has led to an increase in investors' confidence in the economy and in industries. The initiatives like Make in India is increasing and attracting the attention of investors towards this developing and growing economy. Thus, investors' attitude are shaped by economic conditions prevailing in a country. They understand whether the economic climate is conducive or not for the growth of the business in general. There are many factors that can be studied for analyzing the economy like GDP, rate of inflation, fiscal and monetary policy, etc. Industry analysis. A good and booming economy gives positive outlook to investors, but not for every industry. Thus, it is important to study about the particular industry in which the investor is interested. He should make a detailed study about the future of the industry and its prospect. It is often said that a weak stock in a strong industry is preferable to a strong stock in a weak industry. One should make a study whether the industry is struggling or not. A study about past performance of the industry along with its future prospects must be done. One should know about the phase with which an industry is growing. Generally, industry goes through 4 phases. They are pioneering, expansion, stagnation and decline. It is more beneficial to buy stock of a company when it is pioneering and expansion stage, as one can foresee a good return in future. Various other factors shall also be kept in consideration like labor conditions, government's attitude and policies towards an industry. That means whether the government attitude is friendly or unfriendly towards that particular industry, whether there would be good prospects from the government side towards that particular industry. Competitive conditions, that refers to the competition prevailing in that industry, whether there is threat of new entrants or not. Next is company analysis. The final analysis after economic and industry is of company. Once an investor has selected the industry, he should then look for the company in which he wants to invest. There are various sources to study about a company like balance sheet, income statement, cash flow statement, etc. Various ratios can be calculated like return on equity, earning per share, price earnings ratio, etc. These information helps the analyst to make a projection about the future of the company and its growth. When performing ratio analysis on a company, the ratios should be compared to other companies within the same or similar industry to make a good decision. As Kevin suggested that in this era of globalization, one may add one more circle to the diagram to represent the international economy. Now, let us summarize what we have learned in this module. Fundamental analysis is one of the very useful techniques available for analyzing the securities of the company. It is an easy technique that helps the investors and guides them about being cautious before investing in a particular share. It also gives an insight about how a person who wants to invest shall choose a particular security. It tells to study about economic, industry and then the company. It is a useful analysis technique for investors. It is basically an analysis for determining the fair value of company security in which an investor is interested to trade.